Welcome to Java, and thank you kindly for joining again. It is September 9th, 2025. It is also Tuesday. There is, again, a lot to cover this morning. There is so much going on. We've got a lot of caution factors coming out. The market's hitting all-time highs yesterday. So with that, let's get started with what we always do. What's going on in the market? Now we've got the fear greed meter still in neutral, a tick down from yesterday, which is a little bit of a surprise, given yesterday did hit another all-time high. So an awful lot of green in the market wasn't a surprise, but it's showing a lot more weakness this morning. So what have we got? An increase in the volatility or the VIX. We are looking over here. The problem here, green solid all the way down. This is including volatility, gold, and oil. Now, gold also hit an all-time high. The markets don't normally move like this together, and when they do, it is normally a warning signal because it shows the flow of capital again is distorted. If you've been here for a while, you know what I'm talking about. If you're new, stick around, I'll explain more. So we've got the 10-year yield dropping 4.066 at this moment. Now, if you chart this technically, it's running into support at about 4%. So if it goes below that, we're going to have to watch out. That severe warning for more issues imminently. We know long term there's a lot of things going on, but right now, expect this rate to increase. When it does, as well as the relative strength of the dollar, which is also kind of spiraling down at the moment as everyone moves away from the relative strength of the dollar, you will see money flow out of the equities market, is what is typical. So, futures taking a look at this, and this is not financial advice. All of this could be thrown by something. We'll talk about it in a moment. But the futures are showing quite a bit flat. It's waiting hesitant. Silver, this shows down, but silver had a good run yesterday and it's in a very strong position. So 41.84 right now per ounce. Gold is above 3,600. Now, crude oil is also at support. At the moment, it's been quite weak. There's been OPEC plus manipulating supply, but we're watching this as kind of washed out a lot of the more expensive to produce companies, and these are mostly US shale producers. So we're watching a little shift in that as crude gets a bit of support. Cryptocurrencies are up in a good way. They are showing a lot of support and a lot of movement. I'll talk about those a little bit later. So, daily drivers. Right now, really, the market is looking forward to the inflation numbers on Wednesday and Thursday. However, I was talking about what could move all of these is 10 a.m. We are expecting employment data revisions. So, since all eyes are on the job market at the moment, if these revisions show the expected move down or even more severe, it could definitely move the market. So, watching that 10 a.m., uh, we've got a lot of cracks in this system that are beginning to show, even though it hit an all time high yesterday and could still go higher, not to mention, but it's showing a little bit of our resistance here. And we have quite a few other things that we need to take into consideration. So, trade deficit widened, even though there's been new tariffs. So, that is an issue. As I said, oil is now at support. So, if energy goes up in price from oil, that also creates some headwinds and inflation or increase in prices. You can say it either way. We've got the relative strength of the dollar is now at a 7-week low and now at support. So this will create a bit of volatility. We've got this serious weakness. The Fed thought was seeing a solid jobs market, and it turns out that that was just an illusion. Obviously, now this is a lie because they knew what they were seeing. These people are in this business, it's all they do. They look at all of these factors all day long. They knew it was coming, but they've been kind of playing the market, so to speak. Now we've got JP Morgan warning the Fed's next rate cut in September could be a sell the news event, and that could cause the weakness in stocks that are showing imminent. Calendar. Today, NFIB, nobody really cares about this. The market doesn't care about any of this other than inflation and job numbers. So we'll just leave it at that. So it's going to be Wednesday. Really, the big numbers come out Thursday morning. We're watching that revisions today. So going specifically, France is causing some turmoil in European markets because there was a no confidence vote. So they're looking for a new prime minister. They've got a lot of issues, and it's being played down in the United States news. But that's a massive issue there. We've got something I would like to cover that I believe is very important. I had a question about what defines an asset versus a liability, because there is a lot of cover in this as well. One feeds you, the other eats you. What do I mean by this? So if you've got an asset, could be either one. A common one they talk about is either your house or your car is an asset. So let's take the car for a moment. The vehicle, if you've purchased a vehicle and it gets you around and you make money with it, for instance, you're an Uber driver or something, and you make more than it costs, that could be an asset. However, if you just have a very expensive car, you've got a loan on it, you're paying interest, you have to pay the insurance, you have to pay, all of these other costs for it, maintenance and the likes. That is a liability. It's eating you, it's eating out your profit, costing you money. Take a home, for example. If you are living in the home, you have a high interest loan, you can barely afford it, you've gotten a home interest line of credit, and you're maxed out on the leverage on it, that is going to cost you an interest, and you can't sustain that for a long time. That is going to eventually crush you. We've also got insurance costs that are rising, as well as property taxes in the United States, as well as others, depending on where you are. So if you are using it as an Airbnb or renting out part of it, that is an asset. So, in short, what puts into your pot is an asset, and what is completely costing you is a liability, nothing else. You want to retire having your money spent in assets so that you're making money off of them, not living off the money you have saved. Living off the money you have saved is a liability. Okay? So I want to make that clear. Any questions, put them in the comments. A few other things. Robinhood stock jumping. They put it on the S&P 500 yesterday. So that gave it quite a bit of a boost. But Strategy, formerly MicroStrategy, the Bitcoin treasury, again got passed over. So that stock dropped a little bit. However, they've still got massive funding. ASML now quietly taking up, talked about this a bit yesterday. They've taken up a huge stake in Mistral AI. Yesterday was NVIDIA, so they are becoming a quiet behemoth in the background. Pay attention to that one. Speaking of NVIDIA, they had their price target slashed, so not doing well this morning. Not going to do well in the stock market this morning. We've got Apple stock should go up on their, everybody looking forward to their event. The last one was quite a flop. This one is promising to be a bit better. Hopefully it will for their stock. Now, the other one I want to talk about, this LMT, Lockheed Martin, and BAE. BAE Systems, they're up and on autonomous move now. They're getting into the larger drones. These are unmanned aircraft, and they are getting the contracts for these. We've also got Applied Research Associates are in line to get major contracts for the new bunker buster bombs, is what they're in line for. So just to show you a little bit of movements there. Now, I want to talk about real estate and some of the effects right now. There is a lot of talk about residential real estate crashing, crumbling, the likes. I believe that's going to be very regional, and this is a take to that. There is going to be some real estate that's still residential that still continues. I believe the crush is more going to happen in the commercial markets. However, let's go into why, and not my opinion. We've got experts warning residents of a looming threat to over $1 trillion in property value. This is a large chunk of real estate. They're speaking about weather prone areas for all of the severe weather that has been happening, and a lot of this targeting mostly Texas as well as Florida. Now, I picked this up and then shortly after got this is for this morning that all of Central Florida is now under a flood threat advisory. So I hope that all of you that are in this area do remain safe. However, this is causing the problem. We've got homeowners insurance pricing people out of disaster prone cities. And the problem with that is that the disaster prone areas are growing. So it's not just coastal US cities. Hurricanes, floods, wildfires, these are all pricing up insurance companies as well as property taxes. Now, Florida recently dropped their property tax in a major move, so that should kind of help there. With this, as mortgage rates dropped even a slight bit, this caused a large amount of refinancing. Now, the problem with this is that people don't just refinance the debt they've got to lower rates. They choose to go up to the value of the home again, and that it is risky. Leveraging your entire home, if you intend to keep it, if you don't intend to walk away and leave the debt, which I don't recommend, it's very risky. So don't leverage your debt. So, what we're looking at going forward, the real economy is very ill, very sick economy. We're getting more and more stories like this. 53 been job searching for 14 months, looking for a chance to work. This, the last time, looked very familiar with this, was the Depression. Along with this was the national mortgage crisis. This is from Wikipedia. So there's a lot of parallels I'm seeing come up. I've been speaking about this for a while, and it is in the works again. So we've got high default rates, soaring loan to value ratios in residential housing market, but also in commercial sector. So the loan to value ratios happen when these rates drop and everybody revalues, pulls value out of the homes, and is just trying to survive because they cannot get work. Now, inflation will absolutely continue because there are, I also didn't mention, a couple of things on the horizon. So, mortgage assistance in some form is going to happen. When that does, that will boost real estate again and will also boost overall inflation. So, this one almost makes me want to cry a little bit. It's coffee is the hardest inflation, but here is the overall, and it is saying 2%, but this is from the Bureau of Labor Statistics, who also now is down in their employment. So if they knew what they were doing, this would all be set and they would be employed still. But we're watching gasoline is on the low end, but we've got energy, which I predict personally is going to increase with all of the artificial intelligence. You will be paying for this AI move. So, this going forward. And I'd also like to mention that inflation cuts out currencies. This was the first coin to circulate in the United States. It did say, mind your business, not in God we trust. It was called the Fugio cent, also known as the Franklin cent, was the first official circulation coin of the United States. It was actually copper from 1787. I'm bringing this up because all currency is bound to fail. And even this one, although this one would have quite a bit of value these days and is all minted in an actual metal, not the cheap chips we've got these days. Now, the last couple of things I would like to bring up, back to the assets and liabilities. Large corporations and companies are buying assets. What are assets is the next question. NASDAQ is making push to launch trading of tokenized securities. So there is a token called synthetics that they're going to be likely using. It's in line for this. Quite a bit more going, but we're moving to a digitized, tokenized system. Inflation to continue. So you want your assets hold your own keys to your assets. What is Tether doing? They say that they are not selling off their Bitcoin, keeping Bitcoin, gold, and land. So, token company, CBDCs, stable coins, but what did they purchase? They purchased gold, land, and Bitcoin. So that's a bit of a clue. We've also got countries, El Salvador, buying $50 million in gold now. Gold has had quite a bit of a run up, as you would know, and they're still purchasing because they believe there's much more to go with the political turmoil going forward. Inflation to come in is going to push the price eventually higher, although at the moment we're a bit of resistance. The pullback would be opportunities to get in again. So, with all of this, I wish you a wonderful day, and until I see you again, my friends, resist.